that feeling when you're just swimming in information trying to figure out what actually matters.
Oh, absolutely. Information overload.
Yeah, it's overwhelming, especially in areas that seem really complex, like financial trading.
Definitely a complex field.
So today, we're going to cut through some of that noise. We're doing a deep dive into breakout trading.
A really specific strategy.
Exactly, one that kind of promises some clarity in all that market, well, chaos sometimes.
It can feel that way.
Our main source here is a book, How to Make Money with Breakout Trading. It's by Indrazith Shantharaj.
Right, and his story is interesting too. Came from IT, became a full-time trader.
Yeah, quite the jump. We've been looking at a pretty detailed summary and review of his book. So our mission really is to unpack the main ideas, the techniques, and importantly, the mindset stuff the book highlights.
Distill it down.
Yeah, distill it into insights you can actually use. Think
Right.
of it like a shortcut, to understanding things traders might spend years figuring out.
Without getting lost in the jargon.
Precisely. So, okay, let's kick this off. What is breakout trading? Why is it so popular?
Well, fundamentally, breakout trading, and the author defines it really clearly, it's about getting into a trade after a key price level breaks.
Okay, a key level.
Yeah, and what's interesting is it's not just any old price movement. It's usually when a market has been consolidating.
Consolidating, like moving sideways.
Exactly, stuck in a fairly tight range. Then it finally pushes past a known support or resistance level.
Support being the floor, resistance the ceiling.
You got it. Support is where price struggles to fall below. Resistance is where it struggles to rise above. And this strategy, it really works best under certain conditions.
Like what?
Well, when that consolidation period has been pretty significant, when those support or resistance levels are, strong, tested multiple times.
Okay.
And crucially, when the actual breakout happens with a big jump in trading volume.
Volume. Why is that so important?
Because that increased volume, it's confirmation. It shows there's real conviction, real buying or selling pressure behind that move. It's not just a random blip.
Gotcha.
So it really brings up a key question for you, the listener. How do you spot these conditions in all that data?
Yeah.
And how do you know if it's a real breakout?
That's a perfect transition because you might think, okay, that sounds complicated, but one of the first big lessons from this book is actually simplicity.
Right. Keep it simple.
Yeah. In a trading world filled with crazy algorithms and tons of indicators, why does this book hammer home keeping things straightforward? What's the thinking there?
I think the core insight is that complexity often just clouds the picture. It can lead to that analysis paralysis we hear about.
All right, too much information.
Exactly. Lots of traders, especially newer ones, think more tools, more data equals better results. So they pile everything onto their charts.
And get totally overwhelmed.
Yeah, and this book just cuts through that. The author is pretty firm.
Yeah.
You only really need to understand 3 things.
Okay, what are they?
Price action, just what the price is doing. Volume, how much trading is behind that price move. And the overall trend, which way the market's generally heading.
Price, volume, trend. That's it.
That's the core focus. The book even has this mantra, market rewards discipline, not complexity.
I like that. Discipline, not complexity.
And it's not just catchy, right? It's about the discipline to focus on what actually matters, what moves the market,
Yeah.
and ignore all the distracting noise.
That really resonates. Focusing like that cuts through so much clutter. But, okay, even with that simple focus, there's this thing every trader just hates. The fake breakout.
Oh, yes, the worst.
You see the signal, you jump in, and bam, price snaps right back, leaves you holding a loss. It's frustrating.
It really is.
So the book tackles this directly. What does it say? How do we try and dodge those false alarms?
It does. And the author doesn't pull punches, calls them every trader's enemy. Because they don't just cost money, they kill your confidence.
Absolutely. So what are the defaces?
Okay, specific confirmations. First, always look for that volume confirmation we talked about.
More volume on the breakout.
Right. A significant increase shows broad agreement, not just a flicker of interest.
Okay, makes sense. What else?
Second, and this is really crucial, wait for the candlestick to close before you enter the trade.
Explain candlestick closing.
Sure. A candlestick shows price movement over a set time, like 5 minutes or an hour or a day. Waiting for it to close means you're confirming the price actually stayed above or below that breakout level for the entire period. It didn't just poke through and run back.
So it gives it time to prove itself.
Exactly. It avoids those quick head fakes. And third, he suggests considering a retest strategy.
A retest.
Yeah, this is maybe a bit more conservative, safer. Often, after a breakout, the price will pull back to the level it just broke.
Like it's testing it again?
Precisely. It tests to see if that old resistance now acts as new support, or vice versa. If it holds that level and then moves off again, that's a very strong confirmation.
So wait for the break, maybe wait for the retest, and hold.
It requires patience, but it can filter out a lot of noise and reduce risk. It forces you to think critically. Is this move really happening? Is the risk acceptable here?
That's super practical advice. And that question, is the risk worth it, leads right into the next big thing from the book, risk management.
Ah, yes. Crucial.
Often overlooked, right? Especially by newer traders chasing big wins. The book says very clearly, risk management is king. So what are the rules of this kingdom?
Well, connecting it back, risk management isn't just damage control. It's what keeps you in the game long enough to be profitable.
Survival first.
Absolutely. New traders often fixate on the upside, the potential profits. But protecting your capital is paramount. The book is adamant. Consistent profits only come with strong risk management.
So what does that look like in practice?
Okay, concrete rules. First, always have a fixed stop loss.
Predetermined exit point if it goes wrong.
Yes. Know exactly where you'll cut your losses before you even enter the trade. No hoping, no moving it further away if the trade goes against you.
Discipline again.
Huge discipline. Second, stick to a strict risk-reward ratio. The book suggests aiming for at least 1 to 2, or ideally 1 to 3. Meaning for every $1 or 1 unit of risk you're taking, your target profit should be at least $2 or $3, or units.
Why that specific ratio?
It's not arbitrary. It builds a mathematical edge. Think about it. If you aim for 1 to 3, you only need to be right maybe 30–40% of the time to break even or be profitable. Your winners are big enough to cover several losers.
Right, so you don't have to win every trade.
Nobody wins every trade. These ratios ensure your winners pay for your losers, and then some, over time. So it really makes you ask yourself, are you protecting your downside as much as you're chasing the upside? Because protecting capital is what lets you keep playing.
That really shifts the perspective. It's about the long game, sustainability, which I guess ties into the whole psychology of it all. The book doesn't just stick to charts and numbers. It dives into the trader's mindset. What does it say about being mentally ready? Why is that such a big piece of the puzzle?
It's huge because trading triggers all sorts of human emotions, fear, greed, impatience. This book really emphasizes discipline again and patience.
Okay.
It specifically warns against trading every little signal you think you see, and it hammers home the danger of overtrading.
Overtrading. Just trading too much.
Yeah, driven by FOMO, fear of missing out, or just needing to be doing something. The book calls it slow death.
Strong words.
Because it is. It churns your account with commissions and small losses, and it burns you out mentally.
So the antidote is patience.
Patience and precision. The author uses this brilliant analogy. Be a sniper, not a machine gun.
Wow, okay. That paints a picture.
Doesn't it? A sniper waits, calculates, picks the high probability shot. A machine gun just sprays bullets everywhere hoping one hits.
So wait for the really good setups. Don't just fire away.
Exactly. It highlights that sometimes the best action is no action. Having the discipline to sit and wait for your setup, the one that fits all your rules, that's often harder than clicking the buy or sell button.
That sniper analogy is powerful. Quality over quantity. Hard lesson, though.
Very hard.
Now, okay, we've talked strategy, risk, mindset. But theory is one thing. The book uses real examples, right? How does it make this stuff tangible?
Yes, and that's a real strength. It's packed with real-life chart examples.
Actual charts showing trades.
Yeah, it's showing exactly how to spot potential entry points based on the consolidation and breakout.
Yeah.
Where you'd place that stop loss according to the risk rules, how you use volume in the candle close to confirm things.
That must make it much easier to grasp.
Absolutely. It connects all the dots visually. Now, it's worth noting for you, most of these charts use Indian stocks and indices.
Okay, specific to that market.
Which makes it super relatable if you're trading there. But, and this is important, the principles are universal. Price action, volume, support resistance, risk management that applies everywhere.
Stocks, crypto, futures.
Exactly.
Yeah.
So seeing it applied on a real chart helps you visualize how you might use these ideas in whatever market you're interested in. It bridges that gap between theory and actual trading decisions.
Okay, so putting it all together, the book got a really positive reception, didn't it? The review we saw gave it high marks.
Yeah, very strong. The Connect with Audio review gave it 4.5 out of 5 stars.
What did they praise specifically?
The simple language, first off. very accessible. Then the practical, clear breakout strategy itself. And, as we just discussed, those real chart examples were highlighted as invaluable.
Who would find it most useful, according to the review?
It seems like it hits a sweet spot. Good for beginners who need a solid foundation, but also for intermediate traders maybe stuck in bad habits like overtrading.
Or just confused about when to actually get into a trade.
Exactly. Anyone looking for, as the reviewer put it, a faceless, clean strategy, something straightforward and rules-based. And particularly good for Indian retail traders, given the examples.
Makes sense.
Stepping back, I think what this deep dive really shows is, well, even in something technical like trading, the real power often comes from simplifying.
Boiling it down.
Yeah, distilling the complexity into simple, disciplined actions. It's not about knowing 100 different things, but mastering a few core principles and sticking to them. That's where the consistency seems to come from.
So wrapping up, whether you're actually interested in trading or maybe just facing complex problems elsewhere in life, there's some solid takeaways here.
Definitely transferable lessons.
Remember that idea of simplicity over complexity, really focusing on what matters, the absolute necessity of managing risk, protecting your downside, and that power of patience. The sniper mindset.
Patience and precision.
We really hope this deep dive gave you a useful shortcut, some of those aha moments without the usual info dump feeling.
Hope it was helpful.
And just to leave you with something to think about, that sniper, not a machine gun idea? How could applying that approach, being deliberate, patient, waiting for the right opportunity before acting, how could that change your strategy? Not just in trading, but maybe in your career, your decisions, anywhere precision and patience really pay off? Something to maybe mull over until our next deep dive.